Hey, what's up everyone? This is Silver Slayer and welcome to your daily silver stacking video. Thank you for tuning in. Now stackers, listen, you are going to miss your opportunity to win some silver if you don't click subscribe right now. Go in the description, click that link, that's the entry video, and may the luckiest stacker win. And I'm actually picking two stackers as the winners, so your chances have essentially doubled. Now listen, we've talked about spot price being detached from the physical price of silver. Spot price is $23, but you cannot buy a physical ounce of silver for $23. Go on AppMex, go on JM Bullion, even for a generic round, you're paying $30. And moving forwards, when spot price hits $50, we're probably going to have to pay $70, $80, $90 for a physical ounce. But why is this happening, Silver Slayer? Well, because silver is scarce. So the SLV, the PSLV, all of that stuff, it's becoming detached from the physical market. Now, I found two very good articles breaking this down. You guys know I really like diving into this stuff and looking at both sides of the coin, pun intended, and really looking at the possibility, the reality, and what we have to do to adjust and adapt accordingly. Now, both of these articles, I'm being serious, are very, very good articles talking about how the silver squeeze changed everything, why the SLV is acting so differently and becoming detached, and not only that, I did make a video a couple weeks ago talking about how someone on the Comex tried to turn in their contract for physical delivery and got denied, rejected. So what is that possibility? We know that if everyone on the Comex tried to turn their contract in for physical delivery, there literally would not be enough. We're talking about 900 million ounces on the SLV alone. There is not 900 million ounces of silver floating around for them to try to turn in. And it reminds me back to 1980 when I think it was the SLV, they only had enough physical silver for the month of October on the Comex. So 1 month, and that's because the Hunt brothers cornered the market, owning around 77% of the global silver supply. So as we move forward, the possibilities are endless. And when we talk about silver being $100, that might not mean spot price will be $100. That might just mean what we are having to pay for an ounce of silver is $100. Spot price of silver is essentially irrelevant because the value of the coin is the metal inside of it, not the price tag attached to it. And that might become a very literal statement in a couple of years. Now, link to both of these articles will be in the description. Let's jump into it. SLV about to skyrocket, and that's why you should buy physical silver instead. Now, do any of you invest into the SLV? I mean, do you guys invest in the SLV on the Comex? Do you, or do you just buy physical silver, right? The core silver stackers always say, if you can't hold it, you do not own it, right? Do you really think your silver is in some vault, some third-party vault? No, it's not. It's theoretically there. But like we've also talked about in the past, every ounce of silver you own in your safe, essentially 100 other people own that. You know, theoretically 100 other people own that same ounce. But since we are in control and it's in our safe, it's actually ours. Those 99 other people that have it digitally, or that say that, you know, the Comex saying they have it digitally, no, it's non-existent. Now, let's look at this. This is going to be a longer video because both of these articles break down a lot. It's not repeating the same type of information either. Each one has different points. You're going to want to stick around. Now, on February 3rd, the iShares Silver ETF, which is the SOB, which is the biggest, amended its prospectus, warned to risk the restricting issuance of new shares due to the lack of physical silver. If this indeed happens, a premium on the SLV relative to the Comex silver futures contract it tracks would form, risking an SLV squeeze as detailed explicitly in the prospectus amendment. Now, premiums on physical silver would go even higher. In 3 silver markets, the physical ETF Comex futures would chase one another in a spiral. Now, when I made that video a couple weeks ago talking about the guy that tried to turn in his contract for physical delivery, it got denied, rejected. Interesting case, and I'm curious if we'll see that moving forwards. We know that the government, the United States, literally banned silver on the Comex. You could not buy silver. You could only sell it, and you could only sell it to big business because since the Hunt brothers owned almost all the silver, there wasn't enough to make these cell phones and these laptops and everything that silver is used for. So moving forward, since there's a shortage, since we have places like Wall Street Silver still trying to corner the market, similar to the Hunt brothers, we could see a similar situation, because you know that the latest iPhone is still going to get made, the new Tesla model is still going to get made, but if we don't have the silver, or if they don't have the silver to make it, where are they going to get the silver from? This would constitute an existential threat to the dollar as a monetary reserve. Since retail investors cannot redeem SLB for physical silver, they would be left with dollars that aren't worth much anymore. Conclusion, buy physical silver, not SLB. Like a game of silver whack-a-mole, the venerable army of silver bugs is armed and ready with their silver mallets raining down on fury of the iShares Silver ETF SLB. As soon as it pops up and does something weird, and something weird it did. Back on February 3rd, just 2 days after silver popped briefly above $30 an ounce from the Wall Street silver movement, just 2 days after silver popped, premiums skyrocketed and physical markets were cleared out of monetary supplies across the world. You could not buy an ounce online anywhere. APMEX sold out, wouldn't even accept orders because they didn't know if they had enough inventory. JM Bullion had so much traffic, their site crashed. It was offline. Provident Metals, offline. I mean, no, they weren't offline, but they wouldn't even take orders. And the few places that would accept orders had several month shipping delays. That's how much silver people were buying. It was insane. I bought 4 tubes of 2021 Eagles during that time. And even if you did get an order in, the site was so laggy that people were sitting in the checkout line, the add to cart checkout. It would freeze, or you would be sitting there for hours. I finally got my 4 tubes of Eagles. And I actually unboxed those on video. That was a crazy video, by the way. But I finally got the shipment. But it was from a place called, what was it? Pinehurst Coins on eBay. Which I know you shouldn't buy silver on eBay. But they're a legit dealer. I've bought from them before. They're big business. It's not like it's just some random dude. But I finally got my order in there. I had to go to eBay, because all the bullion dealers I know of, including SD Bullion, all those places, you couldn't buy silver from. Just to show some context of how big that movement was. Now, the weird thing was on February 3rd, the SLB amended its prospectus and added a new risk factor on page 7. The risk that the fund may run out of available silver to source and be forced to restrict the issuance of new baskets. Similar to 1980, when the price of silver was $50. The Hunt brothers pushed it to $50, and then the government banned silver, shooting the price back down to $14 because nobody could buy it. So obviously the market went into a selling panic frenzy, and the price crashed. It was called Silver Rule 7, which was the actual law that they put into place to ban silver. You can look it up, Silver Rule 7. And then it led to Silver Thursday, which was when the price literally collapsed. So there's 2 different instances during that whole situation in 1980 from the Hunt brothers, Silver Rule 7, and that led to Silver Thursday. You can Google those. I don't make this stuff up. You can fact check me on anything I say. I don't just make this stuff up, ladies and gentlemen. So anyways, Ronan Manley of Bullion Star pointed out this on February 14th when he spotted the change. Here's what he found. Emphasis is Wednesday, 3rd of February, right after claiming to add 3,416 tons of silver to the SLB by frantically tapping the LBMA vaults in London, the iShares Silver Trust prospectus was changed and the following wording added: the demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect an investment in these shares. To the extent that demand for silver exceeds the available supply at time, authorized participants may not be able to readily acquire sufficient amounts of silver necessary for the creation of a basket. Baskets may be created only by authorized participants and are only issued in exchange for amount of silver determined by the trustee that meets specifications described under description of the shares and trust agreement. Deposit of silver issuance of baskets on each day that the NYSE ARCA is open for regular trading. So it is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust for the issuance of new baskets, and that's due to a limited then available supply. So in such circumstances, the trust may suspend or restrict the issuance of baskets. Such occurrence may lead to further volatility in share price and deviations, which may be significant in the market price of these shares relative to the NAV. Now, wow. I mean, talk about insane. And talk about nobody talking about this, right? Talk about why nobody covered this. Talk about why the only time you're figuring this stuff out is from watching my channel. Talk about why the only time anyone ever knew that silver was literally banned is from my channel. Talk about why silver was the number one performing asset of 2020. It beat stocks, it beat Tesla stocks, it beat Amazon. Silver, and we're looking at a literal chart. Gold was number 5. I forget where Amazon or Tesla was. Zoom was up there. But out of every investment, silver was the number one performing asset of 2020. Gold was number 5. I forget the rest. Why did nobody know that? If it would have been Tesla stocks or something else, everyone would have been making articles. This was the best investment of 2020 with the most returns. But nope, it was silver, so everyone swept it under the rug. But anyways. So, if SOB runs out of silver, the ETF skyrockets. The question is, what happened to the SOB if it runs out of silver to add to the fund? As a silver bug myself, I count myself a proud member of the army that wants to see a silver squeeze, but I'm on the fringes of the fringe, and so I'm here to respectfully clear up what I believe to be a major error some in the silver bug community are making regarding the SLB, particularly as it relates to these changes in its prospectus. He really likes that word. He said it like 10 times. Now, this is a long article, by the way. I might have to do this second article in a second video. We'll see. We'll just see how it goes. Maybe. So, some silver bugs believe that if the SLB runs out of silver to source, the shares will fall. But I believe this is wrong. It's just the opposite. If SLB runs out of physical silver to add to the trust, SLB shares are going to rocket higher. Here's why. Here's a part of the prospectus. He said it again. Holy crap, this guy loves that word. Here is a part of the prospectus amendment that Manley did not quote in his article. A significant change in the sentiment of investors towards silver may occur. Investors may purchase shares to speculate on the price of silver or to hedge existing silver exposure. Speculation on the price of silver may involve long and short exposures. To the extent that the aggregate short exposure exceeds the number of shares available for purchase, investors with short exposure may have to pay a premium to repurchase shares for delivery and to share lenders. In turn, those repurchases may dramatically increase the price of shares until additional shares are issued through creation process. This could lead to volatile price movements in shares that are not directly correlated to the price of silver. Now, let me just give some context. I don't agree with this guy right here. And that's because we've literally seen this in history before. When there wasn't enough silver, it crashed the SLV price. Silver was up to $50, but then when you could not buy silver, when there wasn't enough, crashed. You want to know why? Speculation. You want to know why? Because the physical and the digital side is detached. Silver was $50, but then that silver rule 7 came into play. You could not buy silver. Everyone that was holding silver had to sell it. So the situation was a little more extreme, but even in this situation he's talking about, you still had to sell it. And the only people that could buy it were how did they word that? Were very specific. Only authorized participants may be unable to acquire sufficient silver that is acceptable for delivery trust. And they're talking about turning these contracts in. So yes, the situations are, I guess, similar, slightly similar in theory, but still different. And I still think that this could push the silver physical price up, but I don't know what would happen on the SLV. And honestly, it doesn't matter to me, because it matters what happens to the physical. And we know that low supply, high demand shoots the price up for something with intrinsic value like physical silver. So anyways, there are two things to point out about this part of the amendment. First, and this is, let's see what he's talking about real quick. So first, obviously, this is describing a short squeeze on the SLV where shares will rocket higher irrespective to the price of silver. It is not describing a fall in SLV. From a simple supply and demand perspective, if the demand for SLV share exceeds the supply of silver available to back those shares, SLV will trade at a premium to silver futures. And I think that would happen more from a physical perspective. If there's not enough physical silver for big, the industrial sector to be able to make these cars, electric vehicles, then yes, that would push the price up. But it's weird to come from a digital perspective, because we're talking about contracts. We're not talking about, and the only reason it would affect is if people try to turn in those contracts for physical delivery, like the Hunt brothers did. They turned in every single contract for physical delivery, and that's why they owned 77% of the global silver supply. And yes, that's a literal number. Imagine owning 77% of the global silver supply and turning in all of those contracts for physical delivery. Now, if shorts are forced to cover in that event, the premium could be significant, as here we go again, the Prospectus amendment implies. How many times has he said that word? Can someone go through this article and count how many times he said that word? I think he said it around 9. I think he said it 9 times. I'm not even kidding. I think it's been 9 times. What's your guess? So, anyways, this is a long article. I cannot make this. I can't cover the second article. It's a very good article. It talks about things from a different perspective, more of the silver squeeze and less of the I guess the delivery side of things, trying to turn them in. But it also still compares the price of silver digitally to the physical market. And I like how they cover a little bit of history. What I was talking about, right? From where silver was at $50 and fell to $10.80, which was called Silver Thursday. And that was directly because of the market sell-off that you had to do and the silver squeeze from the Hunt brothers. So this is another extremely good article. And this article is coming more from the side where I agree with. I mean, they're both amazing articles, but more what I was talking about for this article explains it here. So, as you can see, I hope you really understand. I hope you really understand how critical. There was almost a car crash outside beside me. I live in downtown, so a lot of trains, a lot of cars, a lot of noise. But anyways. I mean, this could be critical, and like I said in the beginning, this is the most important part. This is why I made this video. Spot price could be $50. Spot price could be $100. But that doesn't mean that's what we're paying for an ounce of silver. So how we think silver should be priced won't be priced that way. We think, oh, spot price is $30. I get to buy silver for $30. But no, spot price is $30. You're having to pay $40 up to $50 for an ounce of silver. Imagine when silver gets to $50, $60, we'll be having to pay $80, $90, possibly $100 for especially something like an American Eagle, not just a generic round. And if you don't believe me, look at this. Spot price is $23.69 right now. But look how much you have to pay for a generic round, $29.24. Almost $30 for one coin when spot price is $23.69. See what I'm saying? We aren't paying $23 for an ounce of silver like we once were, and that's because silver is scarce. That's because there's a silver shortage. The U.S. Mint came out and said there's a silver shortage. The former U.S. Mint director came out and said it. I mean, I've covered so many articles proving, I've even showed the numbers from the Silver Institute literally showing that silver shortage. I've actually made a video covering the below ground supply silver versus the above ground supply silver versus the global production, and showed by 2030 we will literally run out of silver. Can't make this stuff up, folks. Numbers don't lie. It's also why you got to stay tuned on a daily basis, because I got y'all. What other YouTube channel is covering stuff like this, right? And I'm not trying to say, oh, look at me. I'm just saying that you guys need to know this stuff, and that's why I do so much research digging this stuff up, right? This isn't stuff that you can just make on the fly. I put a lot of research in this. I try to find the correct articles, and I also try to make videos that you need to know, not just random stuff. I don't like to ramble on. I like to get straight to the point and give you the best information possible. So anyways, I'm going to wrap this video up here. If you do want to check out this article as well, going more towards what I was talking about, stay tuned. That will be the video after this one, which I'll probably post a little later in the day, maybe around 5 or 6 p.m. So stay tuned. And that's Eastern Standard, so stay tuned for that as well. Make sure you like this video. If you stuck around this part in the video, I praise you. Kudos. It shows a lot about your character. It shows you didn't click off the video thinking you know everything. You wanted to know every piece of information that had to be talked about in this video, and it just that translate, and I can tell that you're a very good stacker, and you probably have an amazing strategy because you're open-minded and you want to get everything. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.